Welcome to the Pump and Dump channel for another weekly update. This week talking about oil and copper. I think the most important thing to notice at this point in time is that we are in a situation that is how should I say, a coin flip, or it's a two-edged sword. We can go either way. You can see on my chart from 2014 to 2016 we have this top and this bottom forming, and we can see that the uh, the triangle is established using the high in September 2018 and the low in December 2018, and it's kind of met up here at the Iran-US situation, which was then de-escalated, and since then the oil price has been going down. Um, Given the current situation, I think it's very apparent that we are not only in recession, but we are going to have another financial crash similar to 2008. There's a lot of things that suggest that. It's in the language. I watched Boris Johnson, who's the Prime Minister in the UK, talking about a golden age. It's kind of like Gordon Brown saying the end of boom and bust, or what was it, George Herbert Bush saying the dawn of a new world order, and Trump was also at Davos saying how great they were doing, and it's um, it's looking like the deflationary cycle is just continuing. If I just expand this, if I can, I don't know if I can expand this, but we can see here that from 2008, after a massive run up in oil prices and a collapse to 35 in 2008, during this time here we had a high up here and a low down here, and then we made a lower high and a lower low, and now we have this triangle forming here, and we have to break to the upside, to the downside at some point in time, and I think it's getting mightily close. I think that by June to August, I think in that time frame we definitively have to break to the upside or to the downside. These scenarios are, of course, how should I say, there are possible scenarios that can happen, and it all relies on human input. If we do fall down here and go below, I think it will be apparent that Trump will demand quantitative easing from Powell, who will have to do it because he will have to do it, because not because Trump tells him to do it, but because if he doesn't, then everything's going to crater. And he's of course, from what I've seen, one who doesn't want to do that. He wants to use interest rate cuts and chitter chatter to somehow support the economy. But the truth is, without liquidity injections, the system just deflates eventually, because there's always more money leaving than is coming into the system. So there has to be some quantitative easing. Some people say that the repo operation is quantitative easing, but in terms of what I believe is that the repo, it can be quantitative easing, but it also cannot be it at the same time. It depends on what the ultimate outcome is. The way I see it is that the Fed probably gave some money to some hedge funds to double down on their bond positions, and what of course happened was, when the bond rates went to like 145 in the US and then they rebounded to 190, I mean, if you bought them all the way to 145 and you couldn't find a sucker to sell them to, you need to double down at 190, and then you have to hope for some crisis like now the coronavirus, and when that comes, you hope that people are scared into bonds and they buy safety, and then you can dump it, and then you take your money out, and then you repay your loan to the Fed, and then the repurchase agreement is kind of completed. They gave money, based on the securities to that hedge fund, let's say, and then that hedge fund buys more bonds, and then they might manage to flip them, make a 20-30% gain, and then they can pay off their loan, and then they can maybe survive and live another day. But ultimately, if they don't succeed in suckering people into buying bonds during this time with the coronavirus, when people are fearful, with the stock market dropping, I think it was down 600 points today, There we go, 600 points. People are going to rush into bonds for safety, and that's kind of when the repo action is going to have to be completed, when the people who borrowed the money and doubled down on bonds pushed the price up and now are holding them there, saying you're afraid, you want security, here's some bonds at 160. So that's kind of how I see it. This is kind of suggesting that the repo action will be successful for the hedge fund to make some money in the market and repurchase its treasuries eventually, and kind of make up the capital gains loss that they probably had before they needed to borrow money. And because of that, it won't be QE, and then it will go into the toilet. The system will continue deflating like it has been since 2010, 2011, when QE 2, 3 came into the system, and over time reflated everything. Getting to the copper price next, the same thing I can see here. We have an uptrend here. I mean, it's on my Fibonacci thingy, but whatever. And then we kind of topped out here. We had this resistance here, forming a nice triangle, and then we broke to the downside, and we've just been taking the elevator down non-stop. And that kind of that is significant. This is very similar to what we had over here. The oil price, you can see here, it just went down, and then it went down again, a stepping stone, and then it got to here, and then it found some support, and it had a relief rally, a bear flag here. And I remember, because I have some oil stocks that I have in my file that I value, and I can price them correctly. I remember up here it was a 10% premium when we were looking like there was a war between Iran and the US forming, and as that de-escalated, I remember Justin Trudeau, the Prime Minister of Canada, was talking about de-escalation, and he really emphasized that. And as he said that, and the oil price started coming down, the premium evaporated during this bear flag. It was still trading at a premium, but then as this relief rally came in, the stock just kept falling, and it fell down to here. And I think on Monday it started having a discount to the net present value, and of course it still was falling, but eventually on Thursday the discount, it widened to on one of the stocks from 10 to 15%. And on Friday, even though the oil price is lower, the discount, it contracted to just 5%. So in some way I feel like this is maybe bottoming out, because the stocks are being bought. And usually the way I think about it is that first you want to accumulate the stocks as the price is, wherever the price really is, but you want to accumulate the stocks at a discount, at a low, and then once you have your position established in the stocks, you pump up the price, and as you pump up the price, the net present value rises. And when people a few months later or a few weeks later get all excited about the oil stocks, they start paying a premium. Maybe there's some more news about Iran, and then all of a sudden the people who have accumulated here, they sell them here, and then after they've sold their stocks, they start selling the oil futures, and then the oil price goes down and the stocks go down again. It's kind of like the pump and dump, right? Kind of what my channel has been named after, the pump and dump channel, because that's what it's all about in the stock market. But yeah, we do have some significant risk, as I mentioned, with the chart here, down, up, boom, boom, boom. And it's very clear to me that we need to have some kind of quantitative easing or something in that line to get this price to go to the upside. And if it doesn't materialize, we're going to go down. That's unfortunately how I see it. With copper, like I think I said, this we have this triangle here. We broke down and just took the elevator down, and we are down here. And if we take some stocks I'm a bit familiar with, I can talk about Turquoise Hill. It's even got my triangle on here. this date here, the 21st, this is really important. We can see here that it broke to the upside, and at the same time here the copper price broke to the downside of this triangle here. So at this point in time, Turquoise Hill was fairly valued in this period here, but then when it did this, when the copper price went down, it became overvalued, and now it's gone down. It went to 60. It found some support here on the technicals, and it's been going up here. But I think that even if next week we have a relief rally, it will just be a bear flag, and Turquoise Hill will keep falling even during that. And what's happened here is that the people who have built their large position thinking that copper prices would go up, they don't want to sell. They want to wait for a rally because they know that if they sell now, they will push the price down, which is of course what has happened already. Is that some people have already exited some of their position, but they want to wait until there is a relief rally, and then people who are looking at copper thinking, oh look, it had a big move down and it's going up now, they'll start buying something like a Turquoise Hill because it's a copper stock, and they'll be buying whilst the smart money is dumping because it's overvalued at this point in time, unfortunately. Another stock is Lundin Mining. It's we put a trend line here. Think we can draw one like this. What we can see here is that on the 21st, 22nd, it started going down and it broke underneath this trend line here and continues going down. This will, you know, the same as with Turquoise Hill. If we have a relief rally here, I could imagine this maybe going up a bit, but it would eventually come down, and that would just be, you know, maybe it will go down to 30 again, because that's kind of where I have it valued. I mean, there's some catalysts in the stock that I cannot quantify at this point in time, but I think it has a potential of falling like 40%, and that's because the copper price is going down, and the copper price, I think, will keep going down until stocks like Lundin Mining or Turquoise Hill start trading at a discount to the net present value, just like as what I saw with some of the oil stocks I have in my file. So yeah, just remember, this is not investment advice. I could be wrong about this, but this is what I'm thinking. I'm not, of course, recommending you to go short any of these stocks or commodities, because, as I said, it's looking very, very vulnerable here, and the quantitative easing could come out in February. Maybe, let's say, on the 12th of February, if the oil price is down here at 48, there could be a quantitative easing, and then we could have a massive move up in the stocks first, followed by the commodities later. And yeah, that's kind of what I'm thinking at this point in time. So remember, if you want to leave a question, comment, or opinion, you can do so in the comment section. And if you like the content, don't forget to subscribe, and have a good day.